2019 turned out to be a big year for the media industry, but will investors see more mergers in 2020? Joining us right now for the rest of the hour, dealmaker extraordinaire Aryeh Bourkoff. He is the founder and CEO of LionTree LLC. He's the man behind some huge media deals, including the Viacom-CBS merger, Verizon's acquisitions of AOL and Yahoo, Charter's purchase of Time Warner Cable, and many, many more. Aryeh has penned his annual year-end letter outlining his thematic outlook for media, markets, the M&A, and all of this is coming for the decade ahead. And Aryeh, it's great to see you.
Thanks for having me.
First up, congratulations on the deal you just finished, CBS Viacom. Are you jonesing for another deal already?
Well, jonesing is not the word I would use, but certainly we're on the lookout for the right transactions. Although this one just happened, and I think, like many of us now, we're focusing on stabilizing and executing through the end of the year and picking it up again as we start the next decade.
This one was such a long time coming and had been talked about for so long and was so storied. What does this mean to have CBS and Viacom back together?
Well, when you think about the last decade, we were on the show, or you've been talking for a long time about fragmentation and the media industry being in pieces here and there and having to get scale. And we've largely achieved that. Think about what's happened over the last year between Viacom CBS and Disney Fox and AT&T Time Warner and Comcast Sky. I mean, a lot of transactions have occurred to get us to this point, and Viacom CBS is the latest example. Not easy to execute these deals, but now that they're together, it's really about what you can do from here. This is our theme of scale players being in motion from here.
Are we in peak scale at this point?
I don't think we're in peak scale, but we're certainly near the top of the mountain now. We're stabilizing around scale players. Everyone's learned from each other how we get to this point. There's no more appetite for like the latest sort of hot product or hot company. It's really about, now that you have scale, what are you going to do with it? This is a clash of the titans. Everyone is going to be there competing with each other for the consumer's attention.
Is it fair to think that maybe we're reaching the height of this, not only because companies are the size they want to be? My guess is some of them would like to get bigger, but I'm not sure regulators would allow it.
I think the regulators will probably favor the media industry versus the tech industry. We're not yet at equilibrium between these scale players. Not all scale players are the same.
I don't know. The last couple of media ones that went through got a lot of scrutiny that came from regulators. Not CBS Viacom, but you think AT&T, Comcast, some of the issues they've been through with regulators on these things.
Well, the consumer has a lot of choice these days. There are over 100 streaming platforms available for the consumer, and I would say a lot of the power has shifted from the gatekeeper and the platform to the consumer. The consumer has the choice now. So I think that'll be the lens by which the regulators look at it. Will the consumer continue to have the ultimate choice here?
What do these companies do now that they've reached scale? How has that changed things for them?
It's a great question, because I think every player we're talking about now is not fully formed yet. They have scale, but there still needs to be motion around how you achieve your business plans, even new deals. For example, you may see that so many companies are now focused on video and video streaming. We talk about it a lot. It's a huge renaissance. It's great. But how about the audio business? The audio business is underserved versus the video business in terms of not just podcasting, but also even radio, obviously, is hugely listened to today, and other parts of audio like Alexa and obviously Google Home, et cetera, but also video gaming. Video gaming is a lot less expensive to produce than video today and underserved. So there needs to be some attention paid to everything.
Why do you think the video game guys, or why do you think the streamers have yet to pick off the video game folks? For many years, before, by the way, there were even streamers, there was always a view that some of the big media, Hollywood studios, would ultimately buy the gamers in a meaningful way. And no one's really ever tried.
I think that's still to come. Actually, it's one of our thematics as we go into next year, that we think the video game industry, first of all, has gotten to be a little bit less expensive than it was historically, because you have fewer players and they're scaled up. But also you have a lot more cloud-based gaming platforms coming on now. So it's a lot more of an efficient ecosystem and infrastructure to produce the games and to distribute the games. But I think you'll see that not only in traditional publishers, but also esports, sports gambling, other areas of gaming.
I've always thought that a Netflix or a Amazon Prime, and with Twitch, it would be a natural thing to have, to actually have the games next door. If you were Disney Plus, perhaps, you wanted to have gaming right in the system.
There's a setup, right? Last year we had, this year, Google Stadia platform. Right. Snap has a gaming platform. Amazon has a platform. Comcast has a platform. So you're starting to see the platform set up for it now. I think you'll start seeing the transactions in the future.
If you were an advertising company, would you be hiring people or laying off people based on streaming? Is everybody going to be a subscriber, or is everybody going to be, do we still need to make commercials? Because it seems like I kind of agree with Peacock. I mean, I only want so many streaming. If I get it free, I'll watch a few ads. Which way would you do it?
Too much of a good thing is definitely an issue here. The average U.S. adult spends 11 hours a day on media consumption.
Don't tell me that.
God.
11 hours. That's not really growing.
What did people do 100 years ago? Did they do real things?
Work.
They lived. Yeah, they lived. They worked so they could eat.
So 11 hours a day, and you're being overwhelmed by video platforms, which are fantastic, right? But you have to have a little bit more of a discernment from the consumer. So they say, like, when you play baseball, you have about a half a second to react to a fastball coming at you in the major leagues.
Right.
When you're on Netflix, if you don't find your movie within 90 seconds, you're out. So the reaction time of the consumer is very short right now because of so many different options.
Look, I have to say that. I'm frustrated by the idea that it's not curated for me, that I have to switch between five different. Well, no, I got to switch between five services.
I got a 95%.
Am I going to Netflix? Am I going to Disney Plus? Am I going to on demand on my cable box? It's not all curated in one place.
Watch prison documentaries.
And I have to use 3 different remotes to get between all of those things.
Yeah. So what you're going to do instead, they're going to invest in AI platforms to help get you to that.
So are you expanding
faster.
your advertising company, or are you laying off because it's going to be all subscription?
I think you're still in expansion mode because I think the consumer needs 2 choices. One is a paid option and a free option. And I think every company will get to giving the consumer a choice of having an advertising.
So distributors have to figure that out.
I think the advertising business will come back to TV, come back to outdoor, away from Google and Facebook in some cases because it's just too costly in some cases for people to work with them. And I think it'll come back to the.
But I won't have 10 subscriptions that I pay for streaming services.
I think over time that'll narrow down. Yes.